Mr. Dhananjay Sinha. He's head of research at Emkay Global Financial Services, joins us on the show. It's always good having Dhananjay, and more so after they've come out with their note on Q3 earnings, and they are saying that we are heading for a low single-digit earnings growth in Q3 FY19. Dhananjay, good morning. What leads you to believe that? Is it the slightly lackluster performance of some of the companies that have come out thus far?
Yeah, I think the results that have come out, I think they're not very encouraging as of now. It appears that there is some margin pressure that is emerging, but I think a whole lot of results we need to really look at. I think this is just the beginning of the result season, and there are a lot of consumer names and which are going to announce results this week. I think Z is also announcing, and many other heavy industry companies are also expected to announce results. So I think we'll have to wait. Our view is that there is a decline in margins in the December quarter on an aggregate basis, and that seemed to be from a lingering impact of high commodity prices and raw material prices earlier on. And with the fall in crude prices that we saw during the December quarter, I think that impact is marginal in that particular quarter. Maybe it will come with a lag. But nevertheless, the full impact of the rising raw material price will be seen over there. And I think there is a marginal deceleration as far as the sales growth is concerned as well. So, for our universe, the sales growth is likely to come down from something like 13.5% to 11%. And apart from that, there is a sort of a fall in the margins, and hence the fall in the profit growth. I think what is also coming out in our estimates is that there might be higher incidence of taxes or interest costs, etc., which might be also pushing down the PAT growth. So the adjusted PAT growth that we are expecting is for the quarter on an aggregate basis for our universe is roughly in the region of 3 to 3.5% is what we are expecting. We'll see how it pans out. But there is a marked deceleration from the first quarter, and the 3 quarters that we will be seeing this year, there is a marked deceleration, especially in the third quarter.
Interesting. Do the numbers of Infosys and TCS and the margin performance thereof, Dhananjay, lead you guys to believe that the margin miss that you're talking about will be particularly pronounced within the IT names, and is that disappointing?
So I think on the IT side, we have seen a sort of a decline in margins. I think it is. I think it is not something which is a common factor across the names. So both TCS and Infosys have specific reasons why there has been a decline in margin. I think so we have been overweight on IT. I think the guidance that Infosys is given, which is which reflects a strong traction as far as revenue growth is concerned. I think TCS is also talking about fairly robust numbers and guidance, especially in the US space. So I think the cyclical upturn in the US economy is reflecting on the IT sector. I think the results that have been announced thus far, I think reflect that. Though generally speaking, if you look at the financial markets, they are talking about a slowdown next year, and that is something which has been negated by the traction that the IT companies in India have actually shown. So I think margin compression is there. I mean, in case of Infosys, it is resulting from higher attrition, lower utilization, higher investments in the US geography. All those factors are there. But I think it's not very concerning given the context that there is a positive traction as far as the overall business is concerned. I think if you look at TCS and if you look at Infosys also, TCS in particular is showing a very good traction in digitization as well. So there is I think overall, I think what we have to really look at is the revenue trajectory and how the companies are actually talking about business outlook. Those are positive at this juncture.
Okay. Stay on, Dhananjay. Lots more to talk about. Minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Infosys surprises with an increased guidance for FY19 despite a margin hit in the third quarter. The IT major also announced a buyback at a 17% premium to Friday's closing price, likely to start off 3.5% higher. Avenue Supermarts, on the other hand, reported a disappointing quarter with a 2% profit growth. Margins on the saw a contraction as well, and the stock likely to start off about 8% lower. Amongst companies reporting numbers today, Indiabulls Ventures, ICICI Securities, Tata Metallics, Supreme Infrastructure, Prakash Industries are amongst the ones that will come out with the numbers. While in companies which reported their financials over the weekend, GN Axles reported strong numbers, J&K Bank saw asset quality weakening, while Tata Sponge reported a disappointing set of numbers. In order to meet its steep divestment targets, the Finance Ministry may consider selling part of its stake in Axis Bank and ITC held through the Specified Undertaking of Unit Trust of India, or SUTI, in the next few months. That is according to a PTI note. And Sun Pharma says commercialization of its glaucoma treatment drug Celpros has triggered payments worth $10 million and sales-linked royalties to Sun Pharma advanced research company. Spark could well be a stock that will remain in focus today. In fact, if we can pull up the Sun Pharma advanced research stock on the screen, and let's see how that is starting off, 3.5%. This one is the real winner in the session today, about 3.5% higher in trade. After a long while, we're seeing Spark have some sparks to itself. Dhananjay, time constraints, but within 60 seconds, just a quick perspective. Did the IIP numbers disappoint you? And what's the take on the bond yields? They're slightly soft. They've pulled back a bit today. Is it because of the new series bonds already announced? Quick 60-second view.
So as far as the IIP is concerned, I think the 0.5% growth is disappointing. I think we were expecting in the region of 3.5-4%. I think that's where the market consensus was also there. My sense is that that's largely because of the very high base effect. You had 8% growth, but on a sequential basis, on a seasonally adjusted basis, there is a contraction of roughly about 2%. So that's a large contraction. My sense is that it could be because of the financial conditions being very tight. You had rates being volatile, exchange rate being volatile, crude going higher. So all these things might be impacting the production data out there. I think going forward, we are looking at some improvement. I think the base effect is somewhat adverse. So we're looking at something like 2.5-3% in the balance of the year.
A company like Avenue Supermarts, I don't know if you track it individually, but if not, just that broad brush on companies which are priced exorbitantly and are showing the first signs of chinks in the armor, be it on the margin front, be it on the growth front or otherwise. It may be different for different companies. For iShare, it's different. For Avenue Supermarts, it's different. For Page, it's been different. But what do you do with these names?
So I think any disappointment in terms of margins, revenues, and profit expectation for companies which are very highly valued, I think there might be a sort of a reaction on a negative side if that is the case. So Avenue Supermart, for instance, has shown a decline in the margins. So I think that is bothering the market. Whereas if you look at the numbers, we don't cover the stock, but generally our commentary is that it's largely on the back of the fact that you had a very strong performance last year, so you have a very adverse base effect for this year. But if you look at sequential performance, I think they have been managing reasonably well. So I think the margins is hovering in the region of 8-9%, and that's a consistent thing. I think with respect to this particular company, it is all about volume growth rather than margin. So there's very little you can do on the margins. They have derived maximum amount of efficiency, and so I think the scope for the company to grow and volume etc. is what the long-term view is. They are still visible. They are still present only in few cities, maybe 4 or 5 cities. So there is a considerable amount of expansion that they can do. I think from a market standpoint, the key issue is the valuation. So I think any such disappointment versus consensus view, I think should translate into certain reaction, certain correction in the stock price. But over the long term, this particular stock essentially or company has to be considered from a long-term growth path and long-term story. What their long-term strategy is what one should really be looking at. This will possibly never become very cheap, whereas disappointments will translate into sort of volatility and some correction, and those are opportunities for investors, according to me.
The executive director of Federal Bank, one of the executive directors, Ganesh Sankaran, has stepped down, and that's led to a fall in Federal Bank. It's down about 5.5% in the session today, and very high volumes, I might add. So do watch out for that one. The second worst performer on the Nifty 500. Then there is a Tata Sponge. HT Media corrects a little bit, and the KRBLs of the world then follow suit. But Avenue Supermarts and Federal Bank seem to be the two big casualties at the broader end of the spectrum. At the large cap end, on the banks at least, it continues to remain IndusInd Bank. Dhananjay, what's your sense on some of these banks? I think my conversations with certain dealers and certain analysts seem to suggest that they were disappointed with IndusInd Bank, for example, not being able to give clarity on a few issues, including that IL&FS exposure and how they have kept it as a standard account, and a few other issues, as a result of which IndusInd Bank the last few days has been correcting a percent and a half steadily, has lost about 8 or 9%. What did you make of the numbers and the commentary after that, and what's the call that your gut has, because you track banking as closely as anybody I know?
Right. So we have been somewhat cautious on the name, and essentially with the IL&FS issue that has been there, I think that has been plaguing the stock. I think from the peak, the price is corrected by almost like 30%, and I think from the low it bounced back and it went up somewhat. But I think after the result also there has been a correction. I think the issue with respect to IL&FS, their provisioning for it, the provisioning ratio has been lesser than expected. So while the bank has been showing good amount of growth, I think these issues are likely to plague the market, plague the stock price for at least a couple of quarters. So I think unless the bank is able to sort of come out of this, I don't think investors are going to look at it in a very constructive manner. So I think this stock should remain under pressure for some more time. Okay. Apart from that, on the Federal Bank, we were positive on the stock. I think the exit of Mr. Shankaran is something that will challenge the growth trajectory. I mean, that's the concern at least the market has, because there will be somebody who will replace. But at this juncture, because he has been driving, he's been the key guy who has been pushing for the corporate lending and also SME lending. So the bank has been growing rapidly in terms of the lending growth in excess of 20%. So that is something that will be sort of challenged. I think the stock had done well from a low of 70 rupees. It has come up to 95 or something, in the hope that after the first quarter debacle, post the Kerala flood, I think they had done very well. So I think the confidence of the market on the bank was good. So I think we'll have to see who's the replacement, how the bank sort of drives the growth going forward. I think expectation of lower growth, lower leverage will have concerns on the sustainability of the ROE, which was marginally improving. That's one indicator that investors have been looking at. It's stuck in the range of 8 to 9%. So I think that's where the concern for the markets will be. So if they are not able to sort of translate or continue with the same kind of growth, I think there will be pressure on the stock, and that is possibly the reason why today the stock price has corrected.
6.5%, and Dhananjay, thanks for giving us that clarity as well. 6.5% lower for Federal Bank in the session today. Again, look at the volumes. There were 2.2 million when I first spotted it. It's 5 million shares traded now on a Federal Bank, so it's falling on very high volumes in the session today. Allow me, Dhananjay, to just take a quick technical view here. Brijesh, any thoughts here, Federal Bank?
I think if you look at the last couple of week rally, we are clearly witnessing that at any sort of prices want to exit it out of in the profits now, and this might take stock towards an 85, 86 sort of levels. More downside could be seen around 3, 4 rupees from here as well. So I think people want to just exit it at any sort of price they can get. So that's the selling pressure coming on the stock.
Banks are active today. Axis Bank, because of the Sooty news, I reckon is the top loser right now. Actually, next to Vedanta now, but amongst the top losers in the session today. What's the expectation from the quarter for some of the BFSI numbers? Dhananjay, what is it that you're watching out for the most? Because each of these have their individual pressure points right now.
Right. So I think as far as aggregate numbers are concerned, I think our number is fairly robust. We are looking at something like PAT growth of roughly about 20%. But I think important thing to really look at is we know that credit growth has actually recovered to something like 15%. So we all know that the private sector will be actually doing better than the system, and even ICICI Bank, which was stuck at lower growth at roughly about 12 to 15%, is likely to move up. So there is a good traction out there on the retail lending side, and we are seeing across the board. But if you look at the private public sector lenders, I think the PCA thing has been impacting in terms of the growth performance. But nevertheless, I would say SBI has been doing well in terms of the credit growth sort of matrix. Overall, I think we are looking at a lower increment in the NPAs in this particular quarter, despite the fact that and also there are resolutions that are there of sticky accounts which will be reflected in this particular quarter. So I think overall that's what we are. So there is some amount of incremental betterment as far as public sector banks are concerned, largely led by SBI. So that is the reason overall I would say that there is a sort of a rise in the profit growth. But with respect to the public sector bank, we have been negative, we have been cautious. I think some of the recent developments such as farm loan waivers and also the forbearances that have been given to MSME and the way recapitalization has been done against such directed expansion is something that which will keep us sort of cagey about getting very positive about the component of this PSU component of the banking space. So I think it's safer to be very selective in the PSU banks. Maximum one can look at maybe SBI, and we are heavily inclined towards private lenders. So ICICI Bank, HDFC Bank, maybe Axis Bank as well is something that we are looking at. We are somewhat as I said earlier, cautious about IndusInd Bank. Not very negative, but in the near term, I think the stock could be fairly sluggish.